For centuries, the world's major economies operated under the gold standard, a system in which the value of a nation's currency was directly tied to a specific amount of gold. This created a sense of stability in international trade, as currency values were fixed and countries could exchange paper money for gold. By the mid-20th century, however, economic challenges began to test the system, particularly in the aftermath of World War II. The United States emerged from the war as the dominant global economic power, with the US dollar becoming the world's reserve currency, thanks to the Bretton Woods Agreement of 1944. Under this system, other countries pegged their currencies to the US dollar, which in turn was backed by gold at a fixed price of $35 per ounce. However, by the late 1960s and early 1970s, the gold standard was under immense strain, culminating in a monumental decision made by President Richard Nixon that changed the global economy forever. The Bretton Woods Agreement and its flaws. The Bretton Woods Agreement was established to create a stable international monetary system after the economic chaos caused by two world wars and the Great Depression. Under this system, the US dollar was pegged to gold, and other currencies were pegged to the dollar. This arrangement worked well during the post-war economic boom, but by the 1960s, it became clear that the system was under strain. One major issue was that the US needed to maintain enough gold reserves to back the dollars it issued. As the global economy expanded, the demand for US dollars increased, but the amount of gold available to back those dollars remained relatively constant. This created a growing imbalance. Additionally, the US government was running large deficits, primarily due to increased military spending during the Vietnam War and the ambitious domestic programs of the Great Society. This raised concerns about the ability of the US to maintain the dollar's convertibility into gold. Countries holding large amounts of US dollars, like France, began to demand gold in exchange for their dollars, putting further pressure on the US gold reserves. As the situation worsened, it became clear that the Bretton Woods system was unsustainable. The decision to end the gold standard. On August 15, 1971, President Richard Nixon addressed the nation in what is now famously known as the Nixon shock. In a surprising move, Nixon announced that the US would suspend the convertibility of the dollar into gold. This decision effectively ended the Bretton Woods system and marked the beginning of the modern era of fiat currency, where money is not backed by any physical commodity. Nixon's decision was driven by several factors. First, the US gold reserves were rapidly being depleted as countries like France and Germany exchanged their dollars for gold. By the early 1970s, the US had less than $10 billion in gold reserves, but foreign central banks held over $50 billion in US dollars. If other countries continued to demand gold, the US would soon run out. Second, inflation was rising, driven by the costs of the Vietnam War and domestic spending programs. The US needed more flexibility in its monetary policy to address these economic challenges, and the constraints of the gold standard were limiting the Federal Reserve's ability to manage the economy. Finally, Nixon's advisors believed that by ending the gold standard, the US could devalue the dollar, making American exports more competitive and helping to reduce the trade deficit. This decision was a gamble, but it reflected the changing dynamics of the global economy and the need for a new monetary system. Nixon's announcement shocked the world. The gold standard had been a cornerstone of the global economy for decades, and its sudden suspension created uncertainty. However, it also marked the beginning of a new era of economic policy that continues to shape the world today. Immediate impact and the rise of fiat currency. The immediate aftermath of Nixon's decision was chaotic. Financial markets were thrown into turmoil, and countries struggled to adjust to the new reality. Without the gold standard, currencies began to float against each other, meaning their values were determined by supply and demand in the foreign exchange markets rather than being fixed to a specific quantity of gold. For the US, the move away from the gold standard provided short-term relief. The dollar devalued, making American goods cheaper for foreign buyers and helping to reduce the trade deficit. Inflation, however, continued to rise throughout the 1970s, leading to a period of stagflation. High inflation coupled with stagnant economic growth that plagued the US economy for much of the decade. Globally, the end of the Bretton Woods system marked the transition to a fiat currency system, where the value of money is based on trust in the government that issues it rather than any physical commodity. Under this system, central banks gained greater control over monetary policy as they were no longer constrained by the need to back their currency with gold. This allowed for more flexible responses to economic crises, but also introduced new risks, such as the potential for hyperinflation if governments printed too much money. Despite the challenges, the shift to fiat currency has become the global standard, and no major economy has returned to the gold standard since Nixon's decision. The long-term consequences, inflation and debt. One of the most significant long-term consequences of Nixon's decision was the rise of inflation. Throughout the 1970s, the US experienced some of the highest inflation rates in its history. This period, often referred to as the Great Inflation, was characterized by soaring prices for basic goods and services. The abandonment of the gold standard played a key role in this inflationary spiral. Without the constraints of the gold standard, the US government and the Federal Reserve were able to increase the money supply more freely. This led to an oversupply of dollars, which in turn reduced the value of the currency and caused prices to rise. The oil crises of 1973 and 1979, which saw the price of oil skyrocket, further exacerbated the situation as energy costs rippled through the economy. Another consequence of the move away from the gold standard has been the dramatic increase in government debt. Under the gold standard, governments were limited in how much money they could spend, as they needed to have enough gold reserves to back their currency. With fiat currency, however, governments can issue as much money as they need, which has made it easier to finance deficits through borrowing. As a result, US national debt has increased exponentially since the 1970s. Today, the US government carries trillions of dollars in debt, and the Federal Reserve continues to use monetary policy tools like quantitative easing to manage the economy. While this has provided flexibility in responding to crises like the 2008 financial crash and the COVID-19 pandemic, it has also raised concerns about the long-term sustainability of such policies. The gold standard debate. Should we return? The decision to end the gold standard remains one of the most controversial economic decisions in US history. Supporters argue that the flexibility of fiat currency has allowed governments to manage their economies more effectively, particularly in times of crisis. Critics, however, believe that the absence of the gold standard has led to reckless monetary policies, unsustainable debt levels, and the erosion of the dollar's value. In recent years, some economists and political figures have called for a return to the gold standard as a way to impose discipline on government spending and prevent inflation. They argue that tying the dollar to gold would limit the Federal Reserve's ability to print money and force the government to live within its means. However, opponents of the gold standard point out that the global economy has changed dramatically since the 1970s. A return to the gold standard could create significant challenges for international trade and financial markets, and it would limit the ability of central banks to respond to economic crises. While a return to the gold standard remains unlikely, the debate over its merits highlights the ongoing tension between monetary policy flexibility and the desire for fiscal discipline. As the global economy continues to evolve, the lessons of Nixon's decision remain relevant. The debate over fiat currency versus the gold standard reflects broader concerns about economic stability, government spending, and the role of central banks in managing monetary policy. While the gold standard is unlikely to return, its legacy continues to influence discussions about the future of the US dollar and the global financial system. So that's all for today's video. Hit the like button and subscribe for more interesting content.